Hello YouTube, it's your boy the Crazy Trader, and I'm out here again with your favorite stock review. If you hear any noise at the background of this video, it's the kids in the pool. Okay, my apartment has some kids in the pool and they are all happy and jumping around. I didn't know summer is around. I mean, honestly, I don't even know when summer is, but it sounds like summer is around and the pools are open and these kids are having as much fun as they can. I'm happy for them. I always encourage kids to be outdoors. I just wish they can bring the noise down a little bit, but that's fine. I always encourage. I prefer kids in the pool, on the park. Playing something instead of playing video games. That's how I grew up, so I like it that way. So if you hear any noise, it's just the kids, having fun. They are not messing anything up. They're just having fun. Kids are allowed to play. Kids are supposed to play. I don't know how to swim, so I don't go near the pool. One day when I become rich and retire, and maybe I'm in the Bahamas or the Hawaiis, maybe I'll learn how to swim and then jump in the pool one day. But right now, if I go close, I might drown. So I don't even go close. So just to put it out there, I don't even go close. Anyways, let's just jump right in so I don't take too much of your time. Today I'm going to review a stock, ARR. That's the ticker symbol, Armour Residential REIT. It's also a mortgage, REIT, just like IVR, my favorite, stock right now. So it's also a mortgage residential REIT. So let's look at this. Let's go back just a little bit. Let's see how it's been faring. So 1 week is just 1%, 1.30%. I mean, nothing substantial. Okay, in the past month, 1.89. Let's say 2%. Nothing substantial again. In the past 3 months, it's done 11%. That's pretty impressive. So 11% is pretty impressive. In the past year, that's 36%. And even with the 36% that is done, it's still not at its all-time high. So let's go back to a 5-year chart. Okay, so let's go to one of its highs. That's February 21st in 2020. Before the pandemic hit, this thing was trading around $20.58. If I'm supposed to run it up, let's say $21, and then the pandemic hits, and then geez, sad, all the way down to $6. But now it's doubled in price, so from $6 to $12, which is pretty decent, but it's far away from its all-time high. I'm not saying it's going to go back to its all-time high, but I mean it's doing pretty decent. It's doing pretty well for after post-pandemic. I mean, the pandemic is still not over, but even though we are still in the pandemic, you can see that it's doing pretty well. It has already doubled in price, so that is pretty impressive, and I like it. I have 10 contracts of this. Oh, I'm up. Oh, I didn't know I was up. Yesterday I was down. Today I'm up. But this contract expires in January 21st, 2022. So I don't really mind. I mean, all this money, if I lose it, I don't care, but I still have hope in the real estate, industry. I have hope in the real estate sector, because most of the the industries that were affected, the cruise industry, the airline industry, the real estate, most of them are coming back. Most of them are bouncing back. Some are almost at their all-time high. Some have even surpassed it. Most of these industries have bounced back, except the real estate industry. So I'm putting my money in the real estate industry. I'm buying when people are scared, and then when people start getting greedy, that is when I'm going to sell. I mean, it's a Warren Buffett thing that I read somewhere online. When you want to be reading too many stuff online, that's what you end up with. So $12.43. Let's go down. Let's read something about them. Market cap $873 million. That's pretty good. Average dividend yield 8.2. I mean, I think it's 9 point something. So they've done pretty well as a company. If you go to their website, they have a website, that's armourreit.com. You can get a lot of information, a lot of investor information that you want on there. I don't like reading from their website, because normally if you go to this company's website, the websites are very basic, because that's not what they are into. I mean, they are more into investing. They are not into website development. Most investment websites are very basic, very, very basic. If you look at this, very basic, nothing fancy, and some of the information are really boring if you want to look at on their website. Very boring information. So normally when I'm doing this, when I'm researching a stock, I don't go to their website. I'm just doing this so you can know that they have a website. So there are some people who like the old school, boring fonts, and then this is what they want to see. But there are a lot of information here, very valuable information that you can, if you go to the stock information, you can get stock information, historic prices, dividends, the drip. You can go to as much financial information, any information that you want on a stock. When you go to their website, you can have it right here. Everything is here, but I don't like looking at it. Okay, so this is their current dividend yield, 9.73%. Robinhood said 8 point something percent, which was wrong. So on their website, you can verify that. You can see that 9.73%. So that is original on their website. So that, I mean, at least the website has corrected the wrong thing on Robinhood. You see that? So I don't like reading it from here. So you can go to NASDAQ, you can go to Yahoo Finance and other financial places to see what they have on there. So let's go to their institutional holdings. Okay, anything above 50%, I'm down. Even anything close to 50%, I like it. So institutional ownership, 50%, 50.34% held by institutions, which is pretty good. New institutions, 25 new institutions bought it, increased in the last quarter. 71 increased. Institutional holders, they increase. BlackRock and Vanguard, you always find these two people, you always find those two corporates. These guys have billions and trillions of dollars that they invest, so they're always looking for good places to put their money in, and this is where they did. They put their money in, and they increased it by 3%. BlackRock and Vanguard also increased it by 3%. BlackRock holds 11.4 million and Vanguard also put 2.6 million. The next is State Street Corp, 2.1 million. Myra Asset, 1 point something million. Credit Suisse has 400,000. Van Eck Associates has 433,000. Charles Schwab 428. I mean, you can go through all this, and they also give you another aspects of what the stock or the stock you're holding or the stock you're buying is about. Some people decrease 66 decrease some of their investments. This is mostly portfolio rebalancing because they still hold a lot of stocks. So this is mostly portfolio rebalancing. So they rebalance their portfolio, and that's okay. You always have to rebalance your portfolio in a way. Let's see how many people. 13 people sold out. Not too many big names, just a few. You see 36,000. This is a big sellout. That's 458,000, but that's the biggest sellout. The rest just a little bit. Let's go to the insider activity. What are the insiders doing? Are they selling? Are they buying? Let's see what they are doing, because that will also help us to get a little bit of a foresight in what the insiders are doing. Okay, but buys, let's go to the buys. Okay, there we are. Yeah, we have a lot of buys in there. Even in 2021, you can see the director is this, a director, this, a director, officer. That's a lot of buys. 18,000, another 18,000. Oh, bought, option executed. So big buys there. Let's see the sales. Just a few sales. I mean, that should tell you that a lot of people are holding on to just one sale in 2021, 7,500, just one, and the person still has 75,000 shares, holding still 75,000 shares. So I mean, the person still believes in the stock, so I like that. Okay, so just a few sales in 2021, just one sale in 2021, a few in 2020, and then the rest in 2019. So the company is on solid grounds when it comes to insiders. Okay, I'll go to their dividend history. This is the last thing that I'm going to cover before I get out of you people your space, and because we are always chasing up the dividends. We always want our money to work for us, and let's see how this guy is going to work for us. Okay, it's 9.72. Okay, just by 0.1. That's okay. 9.72. I'll go back pre-pandemic and then post-pandemic. Okay, so this guy pays dividend monthly, not quarterly. Okay, so there are some stocks that pay quarterly, every quarter, and there are some stocks that pays every month. So this guy pays every month per share. So before the pandemic, so this is January 17 cents per share, February 17 cents per share, and then March also 17 cents per share. And then the pandemic hit somewhere around March, if you could remember. And then April, May, nothing. They paid nothing. And then there we go. We jump up all the way to June, and then June they reduced from 17 cents to 9 cents. Right back in July, they increased it to 10 cents, and then they've maintained the 10 cents all the way into April again. So they have a solid foundation. They've maintained their dividends 10 cents even throughout the pandemic all the way to May. That is impressive. That's pretty impressive, especially even though the stock fell all the way to $6 and then took time to go all the way up to $12. So this is pretty impressive. $10 for per share every month. That's really pretty good. If you're looking at it quarterly, let's say 30 cents per share, and the price of the share is $12.43. So 30 cents, that's really impressive, really impressive. So you are looking at $1.20 for every share that you have annually. Okay, so if you just put $12.43 today, okay, that's the price today. If you just invest $12.43 today, you know, at the end of 1 year from today, you have $1.20. That's pretty impressive. So that's a 9.72 dividend yield. Your bank doesn't give you that. I bet you that. I bet you $100 that your bank doesn't give you that. I'm joking with $100. Don't hold me that. Don't hold me for it. But no banks give out the 9%, you know, interest. No bank. Point me to a bank that gives out a 9% interest, and I will invest in that bank. All these banks give us 0.01 or 0.003 or something. I mean, that's all they do. They will loan the money out to you at 20 or 30%. Banks have been, you know, messing with that for a very long time. They will loan the money out to you for 20 to 30%, but when the interest that they give you on your money for you to save your money is just 0.01 or 0.002. So if you're getting an interest of 9%, this is not an interest. It's technically a dividend. And always factor this into this, okay? There's always something called the compound effect. That's compounding effect. That's the drip effect. Dividend reinvesting. So when, let's say you have $1,000 in this and you get $100 back or $120 back as dividend, and then you reinvest into, you know, the stock again, and it keeps buying over and over the years. You know, compounding leads to a bigger, you know, account. Because the more you compound, the more money you make. So don't take for granted the drip effect. I love the drip effect, where your dividends are reinvested into the same stock or into something else. You can reinvest your dividends into something else or into the same stock if you believe into it. Okay, so this is just a short review about Armour REIT. I like them. Armour Residential REIT. I like them. I have a call option on them. I don't have any, you know, shares in this stock because I already have enough, you know, real estate investment trust in my portfolio. If I didn't have any, I would have bought this. If you don't have any, this is a great buy. If you do have some, this is a good hold. So just letting you guys know, great stock. And anyways, I always have to put this disclaimer. I'm not an expert I'm not a financial expert, so you always have to do your due diligence when you want to buy a stock. Okay, this is just for educational and for fun purposes, so don't hold me accountable for any of these. Okay, if you make a profit, you're not going to give me any. If you make a loss, I don't take a bite in it. Okay, so stay out there and stay safe. Okay, stay safe. And like I always say, you always gotta risk it to get the biscuit. And you know, save money, don't make no money. Is that what I say? Forgot. But keep it out there. You guys should stay safe, okay? And stay blessed. Peace.